So we have a little bit more clarity on what the Fed's next steps may be and when they may happen. It's Wednesday, June 25th, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell. You can share with friends, family, or colleagues. But we wanted to come today to discuss what we've heard from the Federal Reserve Chairman Jerome Powell over his two-day testimony to Congress. And this is a heavily scrutinized meeting. It happens over a two-day time period, and they ask questions all the way from the impact of artificial intelligence, to the jobs market, to even the fiscal deficit, and trying to get some idea from the Federal Reserve of what their view is going into the future. But what investors and the markets are focused on is when is he going to cut interest rates next? And we got a little bit more clarity around that. Now, over the past 2 days, the Federal Reserve Chairman has been very clear that they are in a wait and see mode. While we have some tariffs in place right now, the biggest concern around is what will the ultimate tariffs be and what will that mean for inflation? He does believe that they are inflationary, but whether that's a one-time impact to inflation and the degree at which companies will pass this on to consumers is still very uncertain at this point. So he feels confident with where the economy is, specifically the labor market, to just sit in this wait and see approach. And while there's been differing views from a lot of different Fed officials, it sounds like on balance, most officials agree with him that it's okay to wait a couple months to cut interest rates. So we don't think, and we have not thought, that they would be able to cut interest rates in July. We still think that the economy is weakening. It's weakening pretty rapidly. Now, while the labor market remains relatively intact, it is showing signs of weakness, and we have several more employment reports before we will get that September meeting. So we still think that they'll be able to cut interest rates in September. Now, the biggest unknown is the tariffs. The deadline for the tariffs and the reciprocal tariffs is July 9th. What the deals may be, what the end result may be from tariffs is still unknown. And we don't know how much it's going to work its way into the economy, so they want to wait. And we agree with that. The last thing they want to be doing is chasing inflation again like they were after the pandemic. What we've seen from the markets is that the markets today are relatively muted. We've had a pretty robust rebound after what we saw over the weekend with the U.S. bombing the nuclear facilities in Iran. So the markets are taking a breather today. There's really not a lot to absorb except what the Fed said. Futures market is pricing in a September rate cut and then another one in December. And we think that is likely, barring any major changes to inflation. One last thing that was also announced today is that the Federal Reserve is agreeing to relaxing some of the requirements on banks. They decided to roll back those capital rules, specifically what they require on the capital requirements for banks. They're going to revise that to a range of 3.5% to 4.5% from the current 5% level. That should help with liquidity in the Treasury market and could also open up some from the lending standpoint. That's all we have today. We still have some other economic data this week. Tomorrow on Thursday, June 26th, we'll get information on the durable goods, the preliminary reading of that for May. And then Friday, we'll get the Fed's preferred inflation indicator, which is that PCE core for the month of May. So both of those can be market moving events. That's all we have. If you like this podcast, we have a history of that on marketswithmegan.fm. Thank you.